Hey traders, welcome back to another episode of Prop Firm Ask. In today's video, we're diving deep into a high probability strategy using one of the most underrated indicators in technical analysis, the Awesome Oscillator. Combined with price action, this setup gives you a powerful edge, especially if you're trying to pass prop firm challenges or trade with consistency in funded accounts. By the end of this video, you'll understand exactly how to identify high-probability awesome oscillator patterns, how to enter and exit trades for maximum efficiency, and how to combine this indicator with price action to boost your win rate and reduce noise. So, make sure you hit that like button, subscribe, and turn on notifications so you don't miss any future strategies. Let ES begin with a key point. Everything we cover in this video works across markets, Forex stocks, indices, and even crypto, because price action stays consistent and the Awesome Oscillator adapts well across all asset classes. Now, the Awesome Oscillator, or AO, was developed by legendary trader Bill Williams. Unlike oscillators such as the Stochastic or RSI that are bound within a fixed range, the AO is unbounded. It fluctuates freely above and below a zero line, which gives traders more flexibility when analyzing market momentum. At its core, the Awesome Oscillator is simply the difference between a 34-period and a 5-period simple moving average. But it is calculated using the midpoints of candlesticks instead of the closing price. This gives you a clearer view of real momentum shifts in the market. Let's break down the 3 most powerful Awesome Oscillator strategies you can start using today. Strategy number 1. The Saucer Setup. The Saucer strategy is a momentum-based setup that identifies a shift in direction, either bullish or bearish, all on the same side of the zero line. For a bullish setup, here's what you need. The Awesome Oscillator is above zero. You see 2 consecutive red bars. The second red bar is shorter than the first. Then a green bar forms. This is your trigger. You enter long on the open of the next candle. For a bearish setup, it's the reverse. AO is below zero. 2 green bars appear. The second green bar is shorter than the first, followed by a red bar. That's your entry trigger. You enter short on the open of the next candle. This strategy acts like a visual alert for a pullback and continuation, often catching short-term trend reversals right before momentum picks back up. Strategy number 2. The Twin Peaks Setup. This strategy uses a simple but powerful pattern. A double top or double bottom on the oscillator histogram. It works best as a contrarian setup. A bearish twin peaks pattern forms when both peaks are above the zero line. The second peak is lower than the first. A red bar appears after the second peak. The entire structure, including the trough between peaks, stays above zero. You enter short after the red bar confirms the reversal. A bullish twin peaks is the opposite. 2 peaks form below zero. The second peak is higher than the first. A green bar follows the second peak. The entire pattern remains below zero. Enter long when the green bar appears. This strategy works well because it identifies weakening momentum right before price flips direction. Strategy number 3. The Trendline Break. This one filters out choppy markets and catches early breakouts. Here's how it works for a long setup. AO forms 2 swing highs above zero. You draw a trend line connecting those 2 highs. Extend the line downward through the histogram. When the AO breaks above the trend line before crossing the zero line, that's your early buy signal. You enter long on the break of the line. For a short setup, AO forms 2 swing lows below zero. Connect the lows with an upward trend line. Wait for a break below the trend line. Enter short before the oscillator crosses above the zero line. This strategy gives you a jump on momentum, often before the price makes a clean breakout. Now, let's talk about stop loss and exit strategy. For stop loss placement, You can place it just beyond the most recent swing high or swing low, or use the edge of the AO trendline zone as a buffer to let the trade breathe. For exits, consider these three options. Exit when the AO flips color, from green to red, or vice versa. Exit when an indecision candlestick forms, like a doji or pin bar, or simply use a fixed risk-to-reward ratio like 1:2 or 1:3, based on your prop firm's requirements. Now, when it comes to timeframes, this strategy is super flexible. Use the 5-minute or 15-minute charts for intraday scalping. The 1-hour chart works well for structured swing setups. And on the daily chart, this can be a powerful tool for swing trading or crypto trading. Because of this adaptability, it's ideal for passing prop firm challenges or trading multiple funded accounts. Before we wrap up, here are a few final tips. Always combine the AO with price action, like support and resistance, candlestick patterns, or trend lines, for higher confluence. Be patient. Not every setup is worth taking. And remember, this is a momentum confirmation tool, not a standalone signal. Discipline and confirmation are key. If you found this breakdown helpful, make sure to like this video, subscribe, and hit the notification bell so you never miss another high-probability trading strategy. Also, check the links in the description for our free TradingView template and other tools to help you pass your prop firm challenge. Thanks for watching Prop Firm Ask, and we'll see you in the next strategy video. Stay disciplined, stay consistent, and stay funded.